can you elaborate on the trends in equity investment in the NBFC sector? And
Sure.
both before and after the COVID-19 pandemic, actually, because COVID-19 was really the situation where everybody has suffered, and how has MFI survived the pandemic, and how accelerating the further growth, actually, because MFI got a major hit in this COVID, actually. And then another question which we have in our mind, that increasing share of education loans in the NBFC sector. So education is again one sector where the lot of demand is there. Has led to the emergence of specialized NBFC focusing solely on the education financing. How does a specialized product financing give a competitive edge to NBFC over its peers, actually? So these two questions are from my side, but you are free to cover whatever you want to cover from the sector point of view.
How we see the sector before COVID and after COVID, and what we are seeing now. I think when we were investing prior to COVID, of course, a lot of our companies, primarily in the microfinance space, were really doing well. Coming out of demonetization, we were establishing significant growth rates, expanding, so on and so forth. And once COVID hit, of course, it was a standstill period where we kind of said, stop all expansion, consolidate position, see what we can conserve, and then let's reassess. Post that, I think what we have seen is companies which were fairly well capitalized when we hit COVID, or were able to raise reasonable amount of capital during COVID period, have been able to sustain. And post the COVID period, they've established strong growth. In the last 18 months, most of our portfolio companies in the MFI space have established 30-40% kind of growth rates, if not more. And what also helped from an industry perspective is the change in the regulations, or the release of some of the constraints that we had for the sector. That kind of bumped up both the interest rates that we could charge, as well as the kind of customers we can onboard. And that has really started to show in terms of the business model. The profitability and the returns have started to come back for the sector. And what that also means is that we've seen a lot of interest coming back to the sector. We've always seen in microfinance that they go on cycles, right? So we see a couple of good years of investments, and then something happens, the most vulnerable class, we get impacted. But we've been so resilient, we come back, and then we again see a slew of investments. So over the last 6 to 8 months, we're seeing a lot of traction coming back. Most of our portfolio companies are either have done fundraise or are in the process, and we are seeing good interest coming from private equity. We're also seeing a lot of consolidation starting to happen in the space, which is again good. And as Ashish mentioned, we've also seen some IPOs that have done very well. So overall, I think right now the sector is in a good space, and it should run for another year or so. Then we will have to see what else will come and hit us at that point in time. But right now it's in the good area. But if I move away from microfinance and look at other forms of lending, I think everybody did get impacted during COVID in some form or the other, and nobody could steer away from it. At the same time, the asset class which came back pretty quickly was the housing space. We started to see a lot more traction. We started to see a lot more interest in the affordable housing space that we track. The next to come back was the secured MSME lending space that also started to see a lot of interest. And now slowly we are starting to see unsecured MSME lending space also kind of grow and start to get their interest. Most of the cases, the credit losses have been taken on account. It's been recognized. So now we know what we're really dealing with as a loss, and companies are moving ahead. At the same time, I would also say that we've seen some companies where without having enough capital, or for the want of capital, have stagnated or have had to close down. So those stories are also there as part of the mix. I wouldn't keep that away. But wherever we had good capital, I think companies have been able to sustain, and now most of them are in the growth path. And what we see going forward is so far fintechs and different kinds of models that you were seeing were looked at as competition to NBFCs, but increasingly, as we chart out the ecosystem and start to look at different aspects of it, it's becoming more and more clear that fintechs are more an enablers, and ultimately, even including the regulations, being overhang on all these institutions, there has to be partnership between NBFCs and fintechs in some format or the other, or partnerships between the banks and the fintechs in some format of the other, and they will typically be an ecosystem enabler. And the next set of investments, at least from our side, would be to look at some of these fintechs which are working with NBFCs in either outreach or improving processes, et cetera, et cetera. So that's definitely a segment that I think will evolve much faster as we go along, and that will be a focus area for us too. And lastly, specifically on the education financing, which Ashish mentioned, I think when we were in 2018-19, we were very actively looking at education financing as a sector and a space. And we did have good interest. We did have companies that are growing well, carving out a niche in this space. But come COVID, got impacted the hardest and came back or are coming back still at the last. We've seen companies shut down in that space. We've seen companies getting bought, sold. But as a category, I think for a country like India, where education is prime and there is cost involved, it's not either subsidized or provided for by the government, and it's aspirational. This is a segment which is here to stay. It will go through its cycles. And I guess the question is when you ride on that cycle as an investor will be important. We're seeing that some of the companies are coming back in the space. We are discussing as well as to what kind of investments can be done. But I see that if there are no further shocks, hopefully in the next 3-4 years, this is another area where we will see traction.